Good evening, I'm Giuseppe Basile. I'm the technical analyst and mentor. You can find at the website www.fibstalkertrading.com. I also post regularly on Twitter using the Fibstalker nickname, and you can find my blog at www.fibstalker.com. Today is Sunday, March the 15th, 2015. And my apologies for last week. I could not post my weekly review, but this week I'm coming with the review with the 12 markets I follow. If you want to learn more about the way I look at the market and analyze the market, you can give a look at the www.fibstalkertrading.com, where I have my Fibstalker Methods coaching program. So let's start from the euro dollar here. What you see on the screen is the euro dollar that continued moving lower. When we go back and see the weekly time frame, we know that 2 weeks ago this market actually touched the first target at the 119 level that you see there, and 1089 level that you see here. And this market actually touched then the first target of this setup, 139.71, and it's continuing lower. As I mentioned often in the last few months, there's nothing below this price. Is holding price, and there is the possibility for this market to move right into that 093 level and even continuing lower. Now, if this market continues lower, and even if it does not continue lower, we have a very important anchor here that we're going to use to capture any retraces. Any retraces in this market should result in a continuation. So we're going to use this low here, the 119, and keep tracing from lows to lows until market gets into the 50% level. When that happens, we're going to use the Fib stalking timing technique to enter that trade, a very low reward to risk, and that could give you a very good trade. Actually, could give you a 2000 pips trade here. So that's definitely something to keep in mind. When we look at the daily time frame, at the moment, what we actually see a trade that has been completed recently, and what I mean here is the lows to lows that we had here. And although we were able to identify this level after the fact, there were opportunity to enter in this market after this 115.40 level was tested. As you can see, price went into the first and second target here, but there were opportunity to enter this market here. So what can we anticipate in this market? If this market retraces, consider that this market is um, very much oversold here. If there are retraces, however, the first level I'm going to look at is going to be this 107.80. The reason for that is this is an extension continuation short in this market. Okay, and if price gets above that 108.57, then a retrace into that lows that measure move that I showed you before on the weekly time frame is more probable. Let's move into the SP500 here to see what has happened. Before we get there, I just want to remind you that this market has been actually trading this 1830 level here back in October last year, and after a few months we saw price getting eventually into the 21 level. It's now 2095. Consider this is the contract expiring in June now, and this is a continuous contract. So what's happening now? There is the possibility, of course, for this market to retrace all the way into the next measure move here, extension long, but I don't anticipate that to happen. So we have two levels we have to watch here for a potential retrace. One is being tested at the moment. It is the high to high, and as you can see, there was participation at this 2032. If this market continue higher, we're going to see this market into a continuation into this level here, which is the 2145.50 level here. If the market breaks that 2013, on the other hand, there is the possibility for this market to retrace all the way into the halfway back um, which is from lows to highs here, and that would be the 1958, 1959 here. And if we, sorry, 57, and if we got there, there'd be a very good opportunity to enter along this market. So on the daily time frame, of course, the thing we do when we identify before the fact is 50% level, we never buy blindly, but we apply the Phipps Torking timing technique to this sequence of measure moving lower here. Moving to the dollar index has kept respecting this 94 level that I gave in the past, and in the last 2 weeks actually went into the first and second target of that extension long. So really not a lot to add to this market. We are going to see whether the algorithms are following the sequence of measure move here. So I'm going to remove the previous one, and if we get this price getting into 58 98.54, that's going to be a test and a potential continuation higher. Gold, despite the intervention of the ECB, keeps continuing lower. I believe this market is linked somehow for some reason in the last 2 years with the balance sheet of the ECB. That's something that is very clear when you compare the price of gold in euro against the price against actually the ECB um, balance sheet. So at the moment what we're seeing here is continuation lower. There is a sequence of measure move that we have to study here, and we have probably an extension here from lows to lows, as you can see, and this extension has actually brought price into the first and second target. So at the moment what we can see can say for this market on the daily time frame is that if the market bounces into that 1169.80 and then continues lower, there is the potential to see this market at previous low 113.38 and then 1122. If on the other hand the price breaks above that level 1174.90, 1175, then we have to remember where this market is in the weekly time frame, and we know that in the weekly time frame this market is actually within an area of potential support, which actually acted as a support a number of times, once, two, and three, and four here, and so we are into this area, very important area, and there is the potential for this market to just reverse here. Moving to the US dollar versus Japanese yen, this market actually reacted into a daily level, never a weekly level here. The weekly level we are looking for was actually the highs to highs, and that level was never tested. Now the weekly is neutral, so there's nothing pushing this price lower. This price has been picked up on the other hand at an extension higher here, which printed last week on this weekly time frame a higher high, so there is a potential for this market to just continue higher, and if that's the case, I will remove the weekly level here that was never tested. This market could go into 124.63. Okay, so next would be um, the euro versus Japanese yen. This market, on the other hand, is behaving like we anticipated, and this market actually broke the sequence of measure move as we saw, and this you will remember that we had a measure move here that brought price into the second target, and we had an extension long, and that's not the right trace. So the right trace is an extension long from this level here, which was initially respected, and then eventually it was broken here. It was respected at the beginning of April here. Price got into that first target, not into that precisely, but not before piercing this level. So after this level has been pierced, we knew that this market could retrace all the way into 121.94, and we knew that back in October. So what we saw in this market was just an opportunity to get short in this market, and congratulations to those who actually took the short here. The target for this market is 122. Moving to the pound versus Japanese yen here. This market too is, when we look at the weekly, it's right at this all the way halfway back here, reacted at this level twice, 190, 184.19 here, and again last week. Some people entering short here. Congratulations for doing that. We know that the target for this market is 173.28, and actually this market offered an opportunity also on the daily here. So when you don't capture the highs, there is always an opportunity to enter. So congratulations to those who are in the trade here, and they have to keep this trade into 160, actually the level 163 that I gave here on the 163.30 level. Moving to the euro versus the Canadian dollar here, this market has had an important development at the end of last week, because we broke this all important 134.51 level, and now that this happened, we know that this market has the potential to just continue lower. Now, bears are in control in this market. This market could actually retrace here, and you could make the case that this market actually has reached a second target here if we consider this trade, and there is a possibility for this market to retrace on the weekly time frame after breaking that 61.8% level. On the daily time frame, when we study the market, we know that this market is also extended on this time frame here, and one way we could look at a retrace is to consider the lows to lows here. It's an extension, so if we get into that 137.33 and the sequence of measure move fails into the level, that's an opportunity to get short that level. Moving to the pound versus the US dollar, this market too, so see all these markets are moving all the same way, and actually they are breaking similar patterns here. This market, you will remember, has participated for the second time after 6 years here into that 169 170 level, and recently last week broke the 149.15, and this again is an important development, because this is an extension, so this price could actually continue lower here. The first target has been tested here, and this market could just continue lower into the second target, which would be this 142.27 level. Moving to the Australian dollar versus US dollar, this market too has continued lower, is still into that area of potential support. This area comes and is traced from using the lows in 2001 and the highs in 2011 here. Market is still within this area. He hit a second target of very large measure move here that I've been commenting in the last few months. That's the high to lows here, which progress into the first target and into the second target within this area of potential support. Now this market is just continuing lower, and it's using an extension when we look at the daily time frame, and this extension can be traced from the lows here. This is another bull anchor, and if you want to learn about the way you can trace this measure move in advance and then time them, you want to consider my Fibstalker methods coaching program. So at the moment this market is being pushed, keep being pushed into this 075.01 here, and that's a potential target for this market. There was also an inner move here, an ambush trade, as you can see here, 50% as trade, and these two targets, as you can see, lined up, so the possibility for the market to get into the level is very, very high. Now if this week this market gets into the 077, which is an ambush on the 4 hour, that would be a good opportunity to enter short this market. Moving to the US dollar versus Canadian dollar, this market has continued higher, and it's actually tracing a jumping extension here. So this market never came to trade into the level, the logical level that we would expect, the weekly level, but rather it's using a very aggressive, very aggressive levels here, which which suggests that this market could just continue higher into that first target. And now that first target, it's 129.80, but this market could just could continue higher into the second target. The New Zealand dollar was a very interesting short trade here this week, and also last week we had area of resistance here, which actually pushed price lower first time, second time, and the third time the price went much lower, confirming also the target of this larger time frame here. So the targets on the looking at the daily here are below, and from the weekly time frame we can see that those targets are in the 070 area here. So that's where we could see this market actually very soon as well. If this market retraces this week and hits one of those levels we watch, it's a good opportunity to short this market as well. And finally, the Swiss franc here. As we can see, this market is coming back to previous highs, and there is the potential for this market to just continue higher into 109, reflecting a strength on the US dollar. Of the US dollar on the Swiss franc, and that would actually reflect the strength of the dollar index on this currency, likewise all the other currencies at the moment. So this is it for today. Thanks a lot for watching this video. I look forward to provide any information. If you have any questions, just send me an email. I answer all my emails personally, and I look forward to discuss with you, and let me know if this work is useful. And signing off here. So have a great trading week, and if you want to get more information about my FibStalker methods coaching program, you can go on fibstalkertrading.com. Thank you very much, and have a great trading week. Bye bye now.